Hey guys, today we are talking about gift cards. So, if you have a hair salon or barbershop that sells quite a bit of gift cards, then you'll really want to tune in because I'm going to be talking about these three things: how to record it when it's taxed, and the money strategy for how to move it. Because I see a lot of misunderstanding about this, and I understand why, because it can get a little complicated with the bookkeeping and the taxes, and then, of course, running through the money before you actually earn it. Today is day 25 of 90 days of my 2026 tax talk, and I am in DC, and so I'm gonna tell you right now, it's snowing here and has been snowing all day. So if you are on in the East Coast, I know actually it's like widespread throughout the nation. So you might be snowed in as well. A good time to kind of think this stuff through. All right, so gift cards. If you sell gift cards, they can be a little confusing about these three things: how to record it, when it's taxed, and then the money strategy. So I'm going to go over each one. And the first one, we're going to talk about how to record it. So if you are working with a bookkeeping firm and they are doing your books in an accrual method, then the way it's going to be recorded is going to be very different than maybe what you are expecting. And I'm not going to get too technical here. Um, this I'm not going to get very technical, but I do want you to stick with me so that it can make sense. There are two ways of recording transactions. One way is accrual, the other one is cash. Now, at my firm, here CEO, we do our bookkeeping on accrual basis, even though the majority of our clients are on a tax basis. And again, not going to get technical here, but the reason why we do that is because accrual method of bookkeeping tells a more accurate story. So when someone purchases a gift card, the money is hitting your account, but we don't want to show it on your P&L because it gives you a false sense of the money that you have, made. Because in reality, that income is deferred. Someone purchased a gift card so that they could use it later. So you want to be careful not to think that, oh, this month I serviced, 100 people. Because in reality, if 10 of those services are for later, you want to make sure that your books are accurately showing that. And for bankable reasons, staying bankable, that's a really important thing here at Hair CEO. You want to make sure that that deferred income is shown where it's supposed to, which is really the balance sheet. So again, that's as far as I want to go into like the technical stuff. If you sell gift cards and you're not working with an accounting firm on a regular basis, I would highly recommend you make sure you either learn this or work with an accounting firm that's actually going to help you record it so that you understand your numbers each and every month. So when it's purchased, let's say you purchased something in 2025, someone like you sold a gift card in 2025, but then someone used it, you know, close to Valentine's Day in 2026. On our books, we would want to show it on your profit and loss once they used it, not when they purchased it. Now, here's the tricky part because if we don't want to show it for recording purposes, if we don't want to show it until 2026, then you ask, well, okay, well, when is it going to be taxed? So you're live. Drop in the chat if you think you get taxed in 2025, or drop in the chat if you think you get taxed on it in 2026. I'm really curious to see what you guys are going to say because this is what tricks people a lot. Because again, like I said, when you're doing bookkeeping, it's going to go as deferred, like not earned yet. And then for tax purposes, I think I just gave away the answer. For tax purposes, the IRS actually is going to look at this. They're going to want to see it here. And the reason is because you're taxed on a cash basis. And so the IRS is like, we want to see it when it hits your account because you're a cash basis. We don't want to see it when someone used it. And so, it gets taxed here, but on recorded, you wouldn't see it on your profit and loss until 2026. So again, that can get a little confusing, but if you're working with a good accounting firm that's keeping up your books and making sure that they're recording things accurately, that's something that they're going to record and explain to you when you're looking at your P&L. And the reason why this is so important is because, when you have an influx of cash from gift cards, that can feel really good. The money is in the bank account and you didn't have to do anything for it, right? Well, not yet. And so it gives you that false sense of, oh, wow, I had a really good month. In reality, you have not earned that income yet. And so you don't want to get too excited. It helps with cash flow, which is great, but you don't want to get too excited about where that, where that money is, and because you'll go through it quickly. So this is what I recommend for how to move the money. So when someone purchases the gift card, it's going to go into your bank account, your regular bank account. My recommendation is to move that money from here to a separate account just for gift cards. And this is, again, I'm not talking about if you sell one gift card, a month, but there are a lot of hair salons and barbershops that do a lot of gift card sales. So if that is you, that's when I recommend setting aside a totally separate gift card account. But again, if you sell maybe 3 gift cards a year, that's going to be overkill. I don't want you to do that. So when you move the money into the gift card account, what that's doing is 2 things. Number one, it's allowing you to see, okay, this is money that I haven't earned yet, right? Just like how I was saying, when you record it for bookkeeping purposes, that money is sitting there because it hasn't been earned yet. And then it looks like this in your bank as well, because now you can, visually see, okay, this is how much money I've earned. And then this money has not been earned yet. And then when someone comes in and gives me the gift card, that's when you want to transfer that money back into the checking account. You do that again so that you can feel like, okay, that's when the money was earned. Because I'm telling you, if you spend this money here, and let's say you have a week where everyone wants to just use their gift cards, and that money is already spent, now you're going to have a really tight week money-wise, because if you spent this money already, you're going to feel like you've been overworking, and you're going to feel like, well, where is the money? Because everyone was paying with the gift card. So that's why I recommend the movement like this for folks who do a lot of gift cards. And so this is really the money movement strategy, because otherwise you're going to have a hard time just feeling the money when it comes in. And then again, like if you have everyone wanting to use a gift card at the same exact time, you're really going to feel it that week, because you're working and you don't feel like you're getting paid. Whereas if you put that money to the side and add it to your account every time someone walks in and uses that gift card, now you're not feeling that pinch, because that money is coming in and you're saying, okay, now I've earned this money. So that is how I recommend doing it. Now, if you are a barbershop or a hair salon that sells a ton of, gift cards, and you've never had it explained this way, and you're like, that's exactly like, I need that. That's the type of stuff I'm trying to understand about my books and about my numbers and about my business, then I recommend you get in contact with me or someone from my team, because we only work with self-employed hair professionals and hair business owners, and we do this stuff all the time for our clients when it comes to advisory and our bookkeeping. And now we're in tax season. So for 2026 tax season, we are working with a limited number of clients this year. And so if you want help filing your taxes this season, I'm going to leave a link in the description. I would love for you to reserve your spot. They are going fast. And like I said, it's a limited number. So once they're all sold out, you won't be able to purchase it anymore. And if you're asking, wondering, okay, well, how do I know if the slots are still available? If you're able to schedule, if you're able to reserve a spot, then the slots are still there. The link will no longer work once we are completely sold out. So I'm Jen, and I help simplify profits and taxes for self-employed hair professionals. And I will see you again tomorrow on day 26 of 90 for the 2026 tax talk.